Hello everyone, and you're watching Bitcoin Bubble news channel. Because of the many unique events that can happen, I never really try to guess what will happen a quarter or two ahead of time. Though I don't think it will happen quickly, I think it will be pretty good for the market in 2025 if we see a change from the balance sheet getting smaller to it getting bigger. As those things happen later this year, and then most likely for the balance sheet next year, it should be good. Probably help the world's cash flow. I also say a lot of the time that world liquidity is the best indicator I've seen for Bitcoin price. Most likely world liquidity will rise in 2025. And based on everything else you know about Bitcoin at the moment, I'm pretty optimistic. A well-known macro analyst, financial strategist, and supporter of sound money, Lynn Alden, is a big fan of Bitcoin. She is now even more optimistic about the top cryptocurrency than she was before. Several reasons are coming together to make 2025 a very bullish year for Bitcoin. Gordon, like a lot of other well-known investors and experts, thinks that 2019 will be a busy year for Bitcoin, the US economy, and the world economy as a whole. The main reason Alden is optimistic is that there is a lot of cash in the world. Alden, like Rio Vision's founder and CEO Raoul, thinks that there will be a huge increase in global cash in 2025. This will start when the US Federal Reserve and other major central banks cut interest rates later this year. She thinks that this increase in liquidity, along with other positive factors like the fact that spot Bitcoin ETFs are attracting billions of dollars from traditional investors, will cause Bitcoin prices to go up a lot in 2025. Alden talked about the recent chaos in the world stock markets, the panic reactions, and the quick recovery that followed in a recent conversation with Natalie Brunell. She thinks that people's worries about the Japanese carry trade were overdone, which is why the market recovered so quickly. We are now past that problem, and Alden thinks Bitcoin will have a strong upward trend in the coming months. This is especially true once central banks start cutting rates and the expected surge in cash happens. It has all the latest Bitcoin and crypto news. It's a great look at on-chain crypto data and breakdowns, and the best part is that it's free. In short, they'll talk about what experts think will happen, how on-chain crypto data is broken down, and any breaking news you need to know. Add your email address to the first link in the text and become a better crypto investor right now, along with over 50,000 other people. There are two different time periods. Because of the many unique events that can happen, I never really try to guess what will happen a quarter or two ahead of time. When I think about 2025, I'm pretty optimistic. For the rest of this year, I don't really have a strong view. It was pretty steady between $60,000.00 and $700,000.00 for a while. It's been getting into the upper 50s lately, which is not good. But I believe that if the Fed eventually starts to slowly lower interest rates and the balance sheet starts to grow again, even if it's not quickly, that will be a good thing, especially once the environment becomes more friendly to liquidity. This should happen later this year and then probably for the balance sheet next year. Probably help the world's cash flow. I also say a lot of the time that world liquidity is the best indicator I've seen for Bitcoin price. While it's not the only correlation I look at, it's one of the better ones that makes sense and works in real life. I think that world liquidity will go up in 2020-25, and based on everything else you see about Bitcoin at that time, I'm pretty optimistic. One thing to remember about those really long-term predictions is that they did not take inflation into account. Like Michael Saylor, who gave that talk about what I think is the 21-year price prediction, which is a nice touch. And if I remember rightly, his base case was that Bitcoin would grow to about 7% of all assets, up from about a tenth of a percent or something like that right now. That is a huge increase, but it's also the 70x increase in terms of the percentage of overall assets. It's not like Bitcoin has taken over the world in that case. So can it go from 0.1% to 7% in 21 years? It's not really crazy to me that that could happen. That was his main point. You can get that number by looking at the fact that, depending on the source you use, the world's total assets are now close to $250 billion, which is a very strange amount. It must be around 900 trillion, right? That's pretty much the center. That number will be a lot higher in 21 years when growth and inflation are taken into account. That number will be a quadrillion, which is 1,000 trillion. After that, Bitcoin will likely go up in percentage from whatever tiny number it is now, less than 1%. That's how those multi-million dollar numbers come about. Even though it's clearly a lot of growth when you take inflation into account, it all depends on how optimistic you are. I'm not too surprised by where we are now though, because global liquidity has been flat for about 2 years, which brings me back to my point about how things are related. It makes a lot of sense that Bitcoin is moving around, at least based on that historical measure. When the new year started, I thought it would be higher, but not definitely a new high. So those happened, or at least we reached new highs, even though we are not there yet. Along with that rough schedule of the Fed easing, and then going back to structural, my optimism really goes all the way through 2025. So if I thought that the deficits would go down, or that the Fed would be able to keep rates low for longer, I might have to change my prediction that Bitcoin will go up. We're comparing the exchange rates of two different kinds of money. That is why the basics of both currencies are important. But based on the schedule I see, I feel pretty good about next year. Lynn Alden's analysis of an upcoming rise in global liquidity is very similar to Robopal's everything core thesis. This thesis says that central banks have to print money from time to time to keep their economies going and stop a widespread collapse of sovereign debt, like the crisis that was almost happening during the Great Financial Crisis. Powell says that we can correctly predict bull and bear markets if we keep a close eye on what central banks are doing. In an interview with Natalie Brunell, Alden says that markets are about to collapse because central banks have been removing money from the system for 2 years. This, in her opinion, means that the time of quantitative tightening is almost over. And that much needed cooling off is on the way to keep things from getting too hot. Alden thinks this change will be very good for Bitcoin and other cryptocurrencies, but she also says it might not have a big effect on other types of assets. Here are some more interview clips. It's always possible for something big to happen, but if nothing big happens, I would expect a kind of mild rate cutting cycle. Note that markets are leveraged and weak enough that anything big could happen. That means pretty small rate cuts, maybe at the next meeting or the meeting after that. We'll wait and see what happens when new economic data and CPI prints come in. That being said, I don't think it's that big of a deal if we get those light cuts. One reason for this is the same as the reason why rate hikes didn't have the impact that many people thought they would. A lot of people locked in really low fixed rate debt. So if rates for mortgages, short-term loans or business loans go down a little, it doesn't really make a difference. People are still locked in debt. Most likely they won't refinance that. A big wave of people changing their mortgages won't happen until rates are cut by at least 100 basis points. I don't think it makes that much of a difference. In general, I think people think the Fed is more important than it really is, and not realizing how important it is to have deficits versus surpluses, in this case, very big deficits. That's still a much bigger deal to me than the small things the Fed does periodically. Of course, it would make a big difference if they came out tomorrow and cut rates to zero. What I think is more likely is that the effects would not be as bad if they just started a slow run of rate cuts. When they cut, it seems